Welcome to Books the Biz, the show where real-world business meets real-world results. Hosted by business strategist Dan Paulson and veteran CFO Richard Veltre, this podcast breaks down the stories, trends, and financial insights shaping today's companies. Dan brings decades of experience helping leaders simplify operations, build strong cultures, and scale with confidence. Rich adds his deep financial expertise from guiding organizations across healthcare, construction, logistics, and professional services. Together, they dig into what's really happening behind the numbers and what it means for owners, executives, and anyone trying to grow a stronger, smarter business. This is practical conversation, real talk, and tools you can use right now. Welcome to Books the Biz.
Good afternoon. Welcome back to Books the Biz. Rich, tax season, at least the first section of it appears to be wrapping up. How are you doing with all that?
We're doing okay. We'll live as usual.
Well, good. I was thinking of you while I was on vacation working on this wonderful tan, this glow for those watching on YouTube. Managed to de-stress out a little bit, then came back to a pile of mess and also snowmageddon. So we had that up here. I don't know what you had out there, but came back to ice and slush and snow and all sorts of fun stuff.
Well, we did not get that, so you can keep that. Done with that. I'm done with that for this year.
Yeah, well, all ours is melting away finally, so thank God for that. Anyway, we're not going to talk about the weather. We're going to talk about company structures and how to better structure your companies for success. Now, I'm interested in this because, an accountant told me at one point, first I filed as an LLC, and then he filed me as an LLC, taxed as an S Corp. So I'm going to be interested in hearing your information on this because you're really kind of saying for most companies, LLC is probably the best way to go versus an S Corp or a C Corp or anything like that. So tell me more about what you're thinking there.
So I have heard way too many times where, and this is my water cooler comment, that everybody goes to the water cooler and someone says, my guy told me to be an S Corp, so you should be an S Corp too. And I'm like, that person's one and you're over here, you're different people. Your needs are different. Your goals are different. So how can someone just go to the water cooler and say, you should be an S Corp? And that's the end of the conversation. There are so many differences, and there's the question of where are you trying to get to? And unfortunately, it's one of those things where you probably should be thinking ahead more so than here's where we are now. And that's because an S Corp is probably right for a very small person, a very small startup, founder, new company that gets set up. An S Corp can be a good answer because everybody who goes and does a startup and starts their own firm is subject to self-employment tax, which is essentially the equivalent of your Social Security and Medicare. Okay? Right. You look at the rates, it's the same thing. If you had a job, the only difference is on a job, the company pays half and you pay half. On a self-employment where you're doing it yourself, you pay all of it.
Mm-hmm.
So S Corp, does not pay self-employment tax. So you save money if you jump on an S Corp, which is why everybody jumps on S Corps are great, and you get on an S Corp and you're going to save money. Okay. The problem is all the other rules. The other rules of you can only have so many shareholders. The shareholders can only be certain types of shareholders. Okay. Where if you're trying to build a business and take on partners, how many people have an LLC where it's a couple of people and they get together and they combine their investments so they can be bigger, right?
Mm-hmm. Yep.
Or they're a C Corp because they're a public entity, or they're registered with the SEC and they're a C Corp and they have shares and they have different levels of shares. So if you're an S Corp, you can't take on either of those partners.
Mm.
S Corp shareholder has to be a domestic individual. So certain kinds of trusts are an exemption to that, but how many people you know who have those kind of trusts?
Right.
More than likely, you're going to be disqualified when you go after someone who says, I'm going to put it in my LLC or I'm going to put it in a C Corp that's in the family, and suddenly they're no longer an eligible shareholder. So the S Corp just became something that doesn't work for you anymore. Okay. But I didn't hear that at the water cooler. What I heard was you're going to save a couple bucks. You're right. But you just squashed your ability to grow if that was your path to growth. And the person over here didn't think of it. And the person over here wasn't talking about it, just heard S Corp's my way through. Okay. So I'll give you a quick example. I had somebody who had that whole conversation with me about should we be an LLC or should we be an S Corp? And I said, did you run the numbers? No, I didn't run the numbers. This guy told me that S Corp was better. I said, well, let's prove it. And we ran the numbers of everything that he expected to have. And we ran through the S Corp, we ran through the LLC, okay, included the self-employment tax on one side and did not on the other. And the other quirk that came up is in an S Corp, you're supposed to pay yourself a salary. Okay. And they don't tell you how much. They say
no, they do not.
is reasonable compensation, which nobody knows what that is. So you have to guess. Okay, you have to come up with a reasonable explanation of how you came up with what was reasonable. So, CEO of the company starts a consulting business, makes it an S Corp, and he can't pay himself a $10,000 salary and say that's reasonable. It's not reasonable. It doesn't make sense. Okay, so we did that whole calculation, and then on the LLC side, we said, by the way, did you know that if you make all this money, you can actually put more money into your SEP than if you're an S Corp? Because the S Corp only allows you to contribute to your retirement from what you paid in the salary, where the LLC is 100% eligible to put it into the self-employed simplified employee pension plan. Okay. When we maxed that out, the LLC was a better answer.
Yeah, it seems like it would be for, actually quite a few people. So what's the difference, for example, like I said, I'm an LLC, taxed as an S Corp. So technically I'm an LLC, but in the eyes of the IRS, they're looking at me like an S Corp. Is that correct?
That is correct. The S Corp is it's not really an entity. It's a tax election. Okay. You go to the state and you want to open up a new company. You can't go to the state and say, give me an S Corp. They'll say, we don't do that here. They'll give you either a C Corp or an LLC underneath. That's all you have. Those are the options, okay, other than a trust or whatever. But there is no option for S Corp because an S Corp is either an LLC or a corporation that makes that tax election. Okay? Forming an entity happens at the state. Forming an S Corp happens at the IRS. That's literally the defining moment. That you are either one of those other two and you've just made the election to be treated this way. But if you don't follow the rules like that, you will no longer have that election and you will go back to being one or the other, LLC or Corp.
Got it. You kind of touched on it a little bit, but who really should look at being an S Corp over an LLC?
The numbers will work out one way or the other. Okay. My motto has always been the numbers don't lie, right? So either it's going to be beneficial to be an S Corp and not pay the Social Security and the Medicare, that come along with that self-employment tax. But on the, LLC, you're going to pay that, match them up. I would say someone who is bringing in a reasonable amount of money, but can't maximize that pension contribution, or is trying to build and hold on to as much cash as possible, the LLC probably won't help because you're going to pay those taxes as well as you're going to make the contribution to the SEP. So it becomes about cash flow. It becomes how much can you actually accomplish on both sides in an LLC to make it more advantageous. If you're not going to make that pension contribution, you're going to pay more tax than you would on an S Corp. So does it make sense then to just be an S Corp if you're going to stay relatively small, if you're always going to be a couple person outfit, if you're trying to scale, I don't see the S Corp as being a reasonable option. If you're really trying to grow something, the losses that you might get in the first couple of years, S Corp versus LLC, the treatment's the same. So there's not a big difference. But you start to make real money, it's a question of, do you want the extra admin to go and do the payroll work?
Right.
Okay. File a separate tax return, which you may not have to do on an LLC, right? Because the S Corp has the 1120S that has to be filed, and an LLC with only one owner doesn't have to file separately. It files as the individual, like a sole proprietor. So, lots of, I'm already throwing out lots of different quirks here, right? That weren't talked about at the water cooler. The only thing talked about at the water cooler was you're going to save money being in an S Corp. For 1 year, you might be right. For another year, you might be wrong. So for scalability, I like the LLC because not only, we'll add another wrinkle out here. I was talking to someone yesterday that was talking about doing an acquisition and whether or not they should be an LLC or a corp, not even an S Corp, but an LLC or a corp. And what people kind of forget, because the world is different now than it was 20 years ago when LLCs were brand new. Okay. The S Corp is still a corp. It still has shares. Okay. And the other thing about the S Corp is, it can only have one class of shares.
Mm.
So one of those rules that can invalidate your S Corp election is if one person gets more distribution than the other.
Mm.
You've just created what they consider a second class of stock. You can't have two classes of stock in an S Corp. So you're not an S Corp. It's like literally that fast. The conversation I was having yesterday, though, was between the LLC and the C Corp, where I said to them, isn't there a thing here where you can change in the LLC who gets more distribution than the other? And everybody went, oh, we hadn't thought of that. You can't do that in a C Corp. You can't do that in an S Corp. But you can in an LLC because it runs more like a partnership if you leave it alone. If you don't change any elections or do anything, you can make sure that you can allocate differently. So if you're doing an acquisition of another company and you're giving them a seller note, then why can't you put something in there that if they don't hit a certain target, then the seller note gets impeded, or there's an allocation of taxes that go to that seller that is like a penalty.
Mm-hmm.
You can change the allocation of who gets what money to penalize the person that didn't hit their target. And everybody went, we didn't think of that. Well, now you did. Here we go.
And that's why this is not a tax discussion, but this is a strategic discussion, and why you often need somebody who has some financial expertise to actually work through this. Let me ask you this, since I'm going to play interviewer for most of this, because I don't deal with any of this stuff. So it's probably better for me to just ask some questions, go along. Let's say you're in a situation like I am. You started out as an LLC, your accountant moved you from an LLC tax as an S Corp. Is there any way to go back, or once you're there, you're stuck, and basically the only way out of it is you have to form an entirely new entity, basically, to establish the LLC again?
You absolutely can go back. So you can go back to whatever was underneath. So in other words, if you start out as a corp and make the S Corp election, you can essentially write a letter. You write a letter to the IRS that says we are revoking our S Corp election effective X date, and that's it. That's as far as it goes. And then you go back to whatever you originally set up with the state as. So whether it was a C Corp or an LLC, that's where you wind up.
Got it. And you're going to be in one of those two brackets, right? There's never going to be, you're an S Corp. You started as an S Corp, you added on the LLC, or you added on the Corp. So it's always going to go one direction or the other.
Yeah, it does not. The S Corp literally was just an election, and all you do is you write that letter to revoke the election. Now, I believe there's always more rules, but I believe the revocation is binding for 5 years. So you
Mm.
can't be, oh, this wasn't going to work for me this year, so I'm going to revoke the election. And then next year you try to get it again. They, if they're on their game, they're going to say to you, no, it's not valid. You can't do that. More than likely, they'll set up their system based on your letter that you have a 5-year window of no, you can't re-engage. Now,
Yeah.
like you said, absolutely 100% correct. There's always ways to do things. There's always ways to change it. The amount of administration that you have to do, it's easy enough to write the letter and revoke the S Corp election. But if you have to go through that, I'm going to change entity. I'm going to go back and try to be, I was an LLC before. Now I want to become a C Corp. How do you do that? Like, what's the easiest way and fastest way to do that? There probably isn't a super fast way to do that because you're now going through, how do I get a lawyer to help me probably to file a reorg, which generally has, different things that you have to do that allows you to qualify for that reorg, and you reorganize as one or the other, or, believe me, there's 5 or 6 different ways I think that you can do a reorganization. But again, think about all the other things that causes, right? We can talk about tax and it's like, oh, that's easy. We go do this and we go do this and then it's done. Okay. Did you change your name? Did you, need a different bank account because you had to get a new employer ID number, and this is all hypothetical. I don't know which ones they are, but any of those could happen. And now you have to go reset up everything that you already had because now you're under a different name or a different EIN, all these things that you have to think about, they change the world on you. That can change the world on you. And that's a lot of administrative time that doesn't earn you any money.
Yeah, that sounds to me like where it would be really helpful to talk to somebody like you and figure out what really is, your long-term plans. And most people, just think about, well, it's going to cost me, I'll say $150 to file with the state to get my entity set up, and then of course you send that into the feds, and they give you your EIN number and all that fun stuff. But yeah, there really isn't a lot of thought that's placed in that originally. So if you do have grand plans of growing substantially, and you haven't set yourself up properly, it could lead to a lot of extra costs down the road. Correct?
Yes, I would absolutely say that anybody who's thinking about the fact that they're starting something because they want to grow it bigger, talk to somebody about growing it bigger, before you pick the entity. I've had more conversations with people who pick the entity, got everything set up, and then they say, here's what I want to do. And I'm like, but you can't. Or sometimes it's not me. Sometimes we get to the point of, the lawyer is saying you can't do this because of X, Y, and Z. And now you have to go and kind of start over. And now you get into that reorganization conversation and how do I get this from this type of entity over to this type of entity? And once I do that, can I, get the name again? I mean, I've seen this year, especially with talking about this kind of ability to set up as a C Corp, which probably we shouldn't talk about today. Okay. But there's certain ways that you can start up a C Corp, and
Sure.
as it grows, then you can get to the point of the government will say, hey, you did a great job and we're not going to tax you on the growth. And you have to fit certain parameters in order to do that. But this year, the number went up. It went from 50 million to 75 million. And, people are now very interested in this, this code section in the Internal Revenue Code. So we're talking about how do you make the C Corp and become available to grow and not have to pay tax on up to $75 million of growth. And it's a whole new set of conversation with people, because if they already had the entity, now what? If they didn't think about a C Corp, because for I don't know how many years, everybody said, don't do C Corp.
Right.
As a startup, they said, don't do C Corp. And now all of a sudden everybody's saying, shouldn't we do a C Corp? And, the really good attorneys are turning around and saying, hey, guess what? why don't we do this hybrid structure with LLCs and C Corps? And I'm looking at it going, that's brilliant. So now you're saying it's a multi-entity thing.
Mm-hmm.
Okay. So, and that doesn't have to be all that expensive. Like you said, what is it, $150 to set up an entity? So if I can set something up where I preserve that ability to not pay tax on up to $75 million, and it cost me $450 at the start, we should be having the multi-entity conversation.
Well, we've had that to some degree. Maybe we should go into more depth on it from a strategic standpoint in the future, because there are also times where that doesn't make any sense, where the overall administrative costs, the additional tax accounting costs, all of a sudden eat up whatever savings you're going to get. So, we've talked about that, I think, plenty, but maybe there is a time where we talk about the growth side of it, and depending upon how you're structuring, where a multi-entity makes sense. So we should kind of put that in our back pocket, maybe for next week even. Rich, as you're sitting here talking about this, I'm thinking, we do this 20 questions thing. And so shameless plug here. We still do the 20 questions. Contact us. And, if you're either starting a business or looking at changes, we ask you a basic amount of questions. Take an hour of your time. We'll give you a report back and explain to you exactly what we see that might be your best option to approach. Is completely on your decision to do whatever you want to do, but at least you got some feedback from some experts who kind of know from an operational and financial standpoint what moves to make. Rich, if they want to contact us for 20 questions, how's the best way to get hold of you?
Well, you can always send me an email at rich@xcxo.net.
And you can do the same to me, except I'm Dan at xcxo.net. Rich, let's plan on doing our multi-corporation discussion next time, and we can talk about that a little bit further, maybe explain where it makes sense to do and where it makes sense not to do something like that. Sound good?
Sounds fabulous.
All right. We'll talk to you next week.
All right. Talk to you next week.
Thanks for listening to Books and the Biz. If today's conversation sparked new ideas for your company, the team at XCXO can help you turn those ideas into action. XCXO brings together seasoned executives, fractional CEOs, COOs, CFOs, and CXOs who step into your business with the experience, strategy, and leadership to drive real results. Whether you're trying to scale, strengthen operations, improve profitability, or prepare for transition, our experts help you move faster and lead with confidence. To learn more or start a conversation, visit xcxo.net. That's xcxo.net, your shortcut to stronger leadership and a better run business. Thanks again for joining us. We'll see you next time on Books and the Biz.